The recent banking crisis has sent shockwaves across the entire business world, with the Republic First Bank being the first bank failure of 2024. The rest of the economy is trying to figure out what the long-term consequences of this disaster may be. But this is not the first time we have experienced this event. Almost a year ago, a banking crisis that shook the very foundation of our financial system started with the collapse of Credit Suisse, a behemoth of a bank with over $540 billion in assets and a legacy stretching back to 1856. Then, like a house of cards, Signature Bank at First Republic Bank followed suit, collapsing under the weight of the crisis. However, with 2024 still unfolding, the banking crisis is heightening. But what is the cause of these bank crashes? The banking crisis we're living through is like a never-ending nightmare that just keeps getting worse. Just when you think things might be settling down, another one drops. And it's like a gut punch all over again. Since 2017, 15 banks have failed. And just in 2023 alone, we have up to 5 failures. That's more banks gone in just a few months than most of us have seen in our entire lifetimes. And the latest one, Republic First Bank, that really stings. Its collapse on April 26 was the first bank to fall in 2024, and let me tell you, it renewed all those fears we had last year when the whole financial system felt like it was teetering on the edge. This wasn't some tiny community bank either. We're talking about a bank with $6 billion in assets and $4 billion in consumer deposits. That's people's life savings, their hard-earned money, just gone in a blink of an eye. And you know what's really scary? Republic First Bank went under because of the same story we've been hearing repeatedly: rising interest rates. The Fed's desperate attempts to curb inflation by jacking up rates hammered this bank's commercial real estate portfolio. Nearly half of their loan book was tied up in that sector, and we all know how COVID just decimated commercial real estate. So when those interest rates spiked, it was like a perfect storm that Republic First Bank just couldn't weather. However, Republic Bank was already struggling with not having enough cash on hand and activists constantly breathing down their necks. Besides that, they managed to secure a $35 million lifeline from George Norcross and his crew last year, but even that wasn't enough to keep them afloat. By February, the whole plan fell apart. And then, just like that, the state regulator swept in and seized the whole damn thing. $6 billion in assets, just gone. Like a snap of the fingers. It's a nightmare scenario for any bank, let alone one with that kind of size and history. But this all comes barely a year after that catastrophic wave of bank failures that rocked the entire industry to its core: Silicon Valley Bank, Signature Bank, and then the big one, First Republic Bank, all crumbling. It was chaos, pure and simple. Moreover, the aftershocks of these bank failures are still felt today, especially for smaller regional banks like Republic. They're caught in a vice, desperately trying to compete for deposits as consumers flee to the perceived safety of large banks like JP Morgan Chase. However, you know JP Morgan was one of the banks that stepped up with that financial assistance last year, swooping in to acquire the First Republic. Now, watching Republic Bank go down like this, it's disheartening. These are people's livelihoods, their life savings, and their dreams, all hanging in the balance. And with each bank that falls, that sense of security, that trust we all desperately want to have in the system, it just erodes a little bit more. Now, what if I were to tell you that the US banking system is heading for some serious trouble this year, and Americans aren't getting the whole picture? Did you know that back on March 26, 2020, they made a rule that says banks don't actually need to have a single penny of your money in their vaults? They can just hand out loans and make all kinds of moves without actually having the cash to back it up. However, something happened, After the whole Silicon Valley Bank disaster last year, First Republic crashing, and Credit Suisse getting gobbled up by UBS, they had to do something about this sketchy, no money required policy. Meanwhile, a while back, the Federal Reserve introduced a program called the Bank Term Funding Program to help out regional banks that were struggling. Many of these smaller banks borrowed a whopping $161 billion just to keep their operations going. However, the Fed ended that program last month on March 11th. Now, all those banks have to pay back that massive amount of money over the next 10.5 months. That's a pretty tight timeline, right? The big question is, how many of these banks are actually going to be able to repay that debt on time? I have a feeling that fewer banks will be able to do it than people might expect. If they can't repay, they could be facing some serious problems. With the Fed's support program gone, all eyes are on the bank's reserve levels now. The end of that safety net has put a spotlight on just how prepared these regional banks really are financially. It'll be interesting to see how this all plays out in the coming months. Now, when you look at what happened to Republic Bank, they said it's inflation. The report came out showing inflation is very, very high. And why this matters for banks is because it looks like the interest rates are going to stay higher for longer. And that's going to put more pressure on banks because banks tend to invest in bonds and other securities, which lose value when interest rates rise. So, they've invested in bonds, securities, and commercial real estate, all of which are performing horribly. And at the same time, U.S. consumers pulled out $872 billion into deposits year over year. Think about that. Why is the cost of living absolutely crazy? Everything is extremely expensive. Many Americans don't have the leisure of saving. They have to spend their money, and so this is another big headwind for banks. Just imagine, a majority of the big banks in the US have seen their deposit balances drop compared to last year. The really massive banks like JP Morgan Chase, Bank of America, Wells Fargo, and Citigroup, they account for almost 30% of the total $716 billion industry-wide decline in deposits. Now, with this scenario unfolding, investors are starting to bet that there's a growing chance the Fed will raise interest rates again. And if that happens, it's going to put a lot of people, both individuals and businesses, in a really tough financial and mental spot. However, everyone is keeping a close eye on the situation, even the Fed Chair Jerome Powell himself. He's openly warned that problems in the commercial real estate market are going to lead to more bank failures down the line. In his words, he said, "This is a problem that we'll be working on for years. But here's the thing, it doesn't really seem like they're actually working on preventing this crisis. It feels more like they know it's inevitable and coming, whether they prepare for it or not. I mean, think about this. They put interest rates at basically zero the last few years, and they told banks to keep lending out as much money as possible. So basically, the banks were just investing their money like normal, but the Fed was just aggressively raising interest rates, meeting after meeting. With those rate hikes, the Fed knows full well that some banks are going to end up failing because of it. But they're acting like they had no clue this banking crisis was coming. Just look at the collapse of Republic Bank. What these banks are going through is shocking. And get this, the sad reality is that a lot of regional banks issue all the funding to Americans. And if these banks are going down, so with it, go small businesses. Where do people go when they want to get a small business loan? They're going to the local regional bank, their credit union. They're not going to JP Morgan Chase. They're not going to Wells Fargo in most cases. When you look at this scenario, it's all setting up these big banks to become massive institutions over the next couple of years as these small banks begin to fail, and it's just one major loss after the next. So, what do you think about this entire situation? Do you think the Republic First Bank's failure is a huge sign of what's coming to the banks this year? I would love to hear your thoughts in the comment box.